Okay, hi there, guys. Just let me know if you can hear me and see. I just want to see who's on. Probably a quieter one today. Might be short and sweet. We've had the I'll explain in a minute. We've had the apps down at the moment, just the website. All right, who have we got on today? Oh, we had a good weekend also. Sorry, I'm just laughing at random things I've seen pop up. The message service we've got. All right, I assume we'll just get up and running. I'll just get stuck into it. It could end up a short and sweet sort of a session. Chat, just because I think the normal people that have come through the app, it's not actually up at the moment, so you might find there's a few people trying to search for us at the moment. So I apologise for those issues. You can always look at the stream later on; it'll be up in YouTube. So anyway, sorry about that. Welcome to Trade Setup and the live stream. It is the 18th of June, so we'll kick away here now. Like I said, apologies for the app not being down. It's the website. So where it's hosted in Singapore, there's a like a hub or a center where there's a bunch of servers held there. The center's had not so much the servers, the center's had a problem. They've been working on that for a few hours now, and it doesn't look like they've got any resolutions just yet, but they're getting there. So which means the app would probably be, I don't know how long it's going to be down for. I'll have to keep refreshing the site to see if it pops up. But at the moment, yeah, it's been out of action for most of the morning. I managed to send out the alert. It probably wasn't long after about 8:30 Melbourne time that it went down after I sent the initial alert, the morning jumpstart. So today, so far, um, anyone that is following the alert service, just remember we do have one that's just closed out. It is, what do you call it? BKL. So BKL closed out today for a small gain on the second lot. And I don't remember, it was about 12 or 13% on the first lot. Let me just find out. Yeah, it's about 12% gain in the first half. We closed out the second for about 3.3%. So it was a bit of a bummer. I thought that was going to build a bit of a high low and then kick on. But yeah, it didn't. Let's just. And then also we had one that's ticked off on Piedmont. Piedmont. So that kicked off this morning. It's probably about where it is. I think it's about where it got in. So we'll take a look at all those in a minute. Anyone that's new, you can see our general advice warning in the middle there. You'll see that that's, we don't give specific advice, just general advice. And that applies to our alert service and what we talk about during the day, during the live stream. Top left-hand corner, you can join us on Twitter. Top right is Facebook. We're not so active there. But bottom right, just remember to subscribe. For times like this, pretty much, subscribe to us on YouTube at the bottom right-hand corner. That way, anytime you subscribe, we do go live. We hit the start streaming button. It'll pop up with a YouTube saying Trade Setup's going live, just so you know that we're still going, so you're not a bit confused today, as I could imagine. Let's get rid of that. And I copped a bit of grief from a couple of people. I'm sure you're probably listening now. Haven't given me a bit of stick in the chat. I actually enjoyed that. So yeah, sorry about that again, guys, but we'll get that up. That hopefully should be up and running soon. The market, not much happening. It's down less than a point. So pretty much as a break even. You can see that on the SPY futures from Friday night. They pretty much closed pretty much right on break even. So where they opened it, was it 10 past 5, I think it was, on Friday. Pretty much closed at the same spot. So, or where they were at 4 o'clock too, where the futures were at 4 o'clock on a Friday. They pretty much closed exactly the same area. So not much of a day today. The US was down. gave up a bit of the gains from the previous session, but they've been, they were down the session before that, so it's a bit of a mixed bag over there still. It's all sort of based around the trade war concerns. Every time something happens that pops up, there's a bit of a reaction to it, which is understandable, obviously. I think the US announced, or Trump announced, that there's going to be more tariffs on China. And then, of course, you get China said we're going to retaliate. And I think the tariffs are due to kick in on the 6th of July, so it's a few weeks away. In my opinion, Trump does that. He'll go and breathe, spit out some. But it seems that's a bit of a reaction there. So we'll see. We'll see how that goes. I'm just going to turn that off. It's going to annoy me. So yeah, that the market it got a bit tentative, especially in Europe more than anything. But the thing is, the commodities were belt around a bit. Gold dropped about 20, $30, so it was sold heavily. Copper was down. I think commodity indexes were down as well quite a bit. But I think they're holding up not bad today on the ASX because the Aussie was down also. A bit of a bounce in the euro from the session before. The US dollar really didn't change, pressuring the US a bit. Yeah, so not much more on Friday night, but we're taking it. We're up 0.3 at the moment, so we're pretty much just hanging around break even at the moment. So let's take a look at what we've got running. So we had 7, we've gone back to 6, so we went from 6 to 7 to 6 again today. What we've got going, Whitehaven's still kicking off nicely, looking for that $6 mark, tighten the risk up quite a bit there. Happy to tighten it up just below this high low. It is tight, admit that, but I expect a decent reaction or decent off 6. If it doesn't happen and blow straight through, fine. If it does happen, you get some sort of lower high and then you get a deeper correction. We'll have to reassess it from there. So in the weekly, still not too bad, but that's had a good run up since 2016. Boom, straight up. And you can see the last few weeks have been pretty vertical into that $6 level, which is probably not a massive level. You can see that $6 level that was way back in 2012. And a lot of people don't put emphasis, if you're a fundamental trader, you don't put too much emphasis in that so much time away. But in essence, if you're technical, there's a lot of people that trade technicals. We'll just keep an eye on those levels to see if there's reactions, especially if you're sitting on profits like I am. I'd always look at those sorts of levels to see how it reacts. If it looks like it's reacting off there and you're stretched into that level, all these factors go into just going, oh, look, I'll tighten up the stop. Tighten up the stop. If I get stopped out, I can always re-enter. It's not going to hurt. If I get stopped out and it drops like a bag of the proverbial, then I'd rather be out and reassessing it. So the others, we've got ATS, which it's been a slow grinder. We get a little spike up when we got in, about 41. It's backed off, holding around 43. I want to see if that can pop up. It's holding that sort of zone through 42.5 to 43. Gets getting bit up there, but then it won't get on too fast. Sooner or later, you'd expect that to hold a high low. It does that price action quite a bit. Goes sideways a bit, then boom, up we go, sideways, up we go, hop, we go sideways here, then take off again. And that might give us a chance to lock in some gains. But you can see that selling stochastics is edging down to sort of that oversold mark, but it's holding up. So the pressure's been absorbed by the buying. ORA, we're back behind the 8 ball with this little pullback. So we got into the trade at 3. Where did we get into that one? I think it's 349. Okay, yeah, it's 349. Had a bit of a pullback the last few days, and then it's popped up today and Friday. So that's looking okay. I'm expecting that to kick on through 355, those highs. And then from there, you're into clear skies. We just have to keep an eye on it in those blue skies. So it's not, we could actually tighten the risk up a bit, which I think we have on that. No, we still haven't yet. So we've still got our risk down at 335s. Might tighten it up. I'll just keep an eye on that first. I just want to see how it gets through. If we get through these highs into blue skies and it powers on a bit, then yeah, you're happy to tighten up because you can just see the pressure in buying just ticking off that the share price. And if it doesn't, if it just pops its head through and starts finding some selling pressure again, I'll just have to give it a bit more room because it is trending nicely. CAJ, another one that's gapped up today. It's just popped back down again, so it's a bit of a bummer. But that has had a good little spike. You can see 330 took out these previous highs, so it's looking strong. The weekly's the one is a good one. I'm expecting that to get a bit more of a spike. And realistically, you can see this big selling, bit of a pop up here. Actually, I'll make that a bit thicker. I know it's harder to see that big selling down here. Pop up, green week. It edged sideways and started lifting off that same zone, retesting the lows and edging up. So you got this move up till, well, we got just above 30, high 32.5, pretty much where we are. That leg up started around 10. So even if you take it a bit smaller than that and just extrapolate that out from these lows just above 20, say 22, you should be looking up to around that 40 to 45 mark. So I'm expecting this just to get a bit of a kick on the weekly. It's getting a bit stretched up here, a bit overbought, but nothing to say that this can't just hover around overbought. The market kicks on quite nicely. On the daily, it's got, you can see this little pullback has brought in some selling pressure, but it's holding up. Gapped up today, like I said, 33. Just backing off a bit at the moment, a bit of selling pressure coming in there, but you could see that in the next few days just sort of chop around here and then boom, up she goes. Well, that's what we're hoping for. That's the idea anyway. That's CAJ. TCL was a new one. Kicked off nicely. It's back up today. In on that on Friday. And the last PLL, 20.5. So that's actually 20 now. So that's looking good on the weekly. The weekly's the good one. You can see that move up. You got that 2 moves down. 1 lower high, pressed down, but it pretty much held up at the lows at 14. We popped up, pulled back, built the higher low at 17. So that there from the weekly should see a move up through you'd expect over the longer term, especially when it's low priced, only 20 cents. This could be the start of a good, strong, healthy move up. You should see that take out the 23, 24 at previous high and then through 25 on its way up. But again, we'll see how that plays out. So that's it. Any charts, just start chucking them now so we can get a bit of a run on that. Not much I was planning on talking about. We've been trying to get this internet up and running, see if we can get the app working, but it hasn't played out that way, so I haven't planned too much. I thought what I was looking at probably could be of interest. I find it interesting anyway. I'll go back. A research report, not a bad research too much, but somebody popped out more of a heads up on was it Cobalt? So I don't know anyone that's got following Cobalt and the stocks related to Cobalt. Well, as you probably know, I don't follow it too much. I don't follow it from day to day. Like a lot of the brokers when they're looking at their fundamentals, but talking up Cobalt, saying, well, there's a lot of good factors fundamentally supporting the price of higher Cobalt, higher demand for Cobalt. So obviously you go and look at shares, and I've got a massive list. I don't know how I found it. Big list of shares, and a lot of them have just been coming down, for quite a while. So just go through a few. We've got AUZ. Actually, that one's, in all honesty, that's looking quite good. That's popped up on our radar for what we like to see. And I don't mind that one. Anyone that could see. Actually, let's go over here. AUZ. This one's looking pretty good in my book. And I'll get up my tools. It's worth looking at. So the news on Cobalt, I liked it. I liked what they were saying. I guess there's a lot of people that would know a lot more about the fundamentals behind it, but the technicals, I think a lot of them are looking rubbish. Some of these stocks are looking rubbish, but there are a few that are looking pretty good, so worth keeping an eye on, especially if the demand pushes up. Apparently, there's a lot of demand in cobalt still, and it's projected to pick up over the next few years. But then there's also talk of battery, the technology behind it, behind batteries is changing, so they don't need, say, things like cobalt, obviously. And if that does, then obviously a lot of these stocks are going to cop it. Maybe that's what people. That's not apparently not for years to come. So there's still going to be big demand for cobalt into batteries, to lithium-ion batteries. So there should be. You'd expect a lot of these 9.7 and 9.9. Anyone that doesn't know, below 10 cents they go in 0.01 increments. Above that it's half cent increments. So it's from 10 to 10.5, 11, and so on. Below that they go 9.9, 9.8, and so on. So a lot of people will play around. A lot of the guys will play around between up. They'll buy it just below, say 9.7, 9.6, tick it off. When it's bid 10, offered 10.5, everyone else, your retailers are looking at it, okay, we're ready to go. And they just get out those midpoints, 10.2, and then just edging out at 10. Maybe it trades 10.5. It depends on the stock. It doesn't always happen. Sometimes it just goes. A lot of time they can just go straight up, but a lot of time it can get played. You get it looks great, and then gets played around that 10-cent mark, and then it drops off, and then it doesn't come up on the scanners for a long time after that. just because they can play it, they might start edging in, loading up around 9 or whatever they do, and then you'll see this, the volume start picking up, coming into 10, it goes above 10, and they start edging back out again. But so we'll keep an eye on that. That's what I don't like, sort of playing around. But if it does break through 10.5, that little high there, it could be a goer. You can see that it's powering on. That might just break through and look back. There's not going to be that 10-cent move. You've got a good support zone around that 8. You can see that's popped down. Took a lot of time, a lot of effort to get back up to sort of where we about 14 and a half there. Come all the way back down the retest. Don't know what happened here. Probably back of some news. Gapped up, sold straight back down again. So it's not good when it gaps up here on the back of news and then boom, straight back down. It washed out. But what we've been doing now, it's looking like it's holding some lower highs. But whether it's just going to pop back up to 12, and then you get a lot of that movement between that 8-cent mark and this resistance zone as it's coming down. Just chopping around between there, we don't know. And this could depend on, purely the demand for cobalt. But that was one. I don't mind that. That chart actually looks quite good, but I wouldn't be buying it at 10. I'd probably want to say buying at 11, for example. Then they've cleared out that 10-cent zone. It looks to be just bought up more on fundamentals and because it's a good stock, as opposed to that playing around that level. BAR was another one. It doesn't look that great on a chart technically, even on the weekly. It doesn't look good at all. So probably that's not one to keep focused on. But you're just going through a few. It's showing that you can't always bank on those, and your analysts, whether they take into account, all they're doing is analysing prices, demand, and all that. But whether they don't really look at the charts to see whether it's been factored in or not. I just found this interesting. I thought I'd pop that up anyway. BSX, another one. Look, that's been hammered, not too well, coming into June, end of last month. So whether that story, that demand story, has already been factored in, the profits have been made, and it's coming back out of the market, or whether it is coming to, some of these are coming to a point where that story. Oh, don't forget about that one. What was that? BDI. What was the other one? RMX is another one. Not a cracker. Doesn't look very too good at all. There's a few that we were trading this one. Not that. We were trading this one. CLA. Technically was looking great up until about here, when it would have stopped us out. I think that would have stopped us out. This move today, we got out a bit earlier. Somewhere we only lost half a cent. We got out at 21 from 21 and a half. Doesn't look that great here. Just at the moment, you can see that essentially a double top around 24. It's come back down in just the last few days, or last today, probably broke through. It's only a little bit, but it's broken through that higher low. That's not a big thing until we get a solid, clear push through it. But couple that with a double top, it's not a very strong technical trading pattern as such. You can see here, did it actually trade through there? Just want to see if that's right on the lows there. So that previous it has come down. You can see it's come down, tested it. Didn't really wash it out. So we're just got to keep an eye on that to see if that's going to be a washout. Again, we're just looking for that push down to the zone. It's washed it out. We'll see if it can pop back up and then retest it and then fail and get a few higher lows build. That might still be a goer. But it's just, I don't like working against, a lot of the time, double tops or lower highs. They tend to lead to a deeper correction. So, and that the deeper correction meaning they're taking out the most recent anchor level, and the anchor level to this move up at that stage was just here. So what we've got is a pop up, double top. You tend to lead to a deeper correction. The market has to reset itself. Deeper correction, then you get a few high lows start to build, and then you get your entry set up from there. But if that's the case, it's got a fair bit more work to do. Otherwise, it's still either way. It's got a fair bit more work to do, I'd say, even if it's going to hold up around that, what is it, 19 mark. If that's going to find out that's just a bit of a washout, it has to lift off that zone, maybe retest it and build some high lows before the confidence. I'm gaining that confidence that that's going to be, that level starting to hold. Buyers are stepping in there. They're supporting it. You can see it's overextended here as well on the downside. It's just whether the buyers are happy to step in around there or whether they're going to let it drop a bit more. But we'll see. But that was one we've traded a while ago. Just didn't like the look of it, the way it reacted straight off that support, come back down, popped up. Okay, we're out. Bailed. Rather than bail and be on the sidelines when you don't know what's happening, than staying in when you don't know what's happening, when it's not going to plan anyway. What else did we have? So it's just a few. It's worthwhile. CLQ is one I didn't realize. That's Clean Tech Holdings. Didn't realize they're into cobalt. I think they've got a new one. There you go. Sunrise Cobalt Nickel Scanner, New South Wales. 100% owned. 100% owned. So that's interesting. So that's a good. That could be a good play. Actually, look at that chart. Just keep an eye on this one. Is that what I wanted? Yep. Keep an eye on this one, guys. Come on, Braid. Get with it. I want the screen, full screen. There we go. So just keep an eye on this one. You can see the weekly looks kind of good. You know, it's fairly clear. We've had this pop up, pull back. You know, that was the anchor at that stage. Then we had it lift. That was beautiful. All the way back down to the anchor. So this is why it's always worth taking note of the weekly charts as well, because um, the weekly can rise like this, but then when you start getting them rising, you know, they go a bit more vertical and get further away from the previous high, like we did here. A lot of the time, you know, especially if the, well, that's not very good. Let's take that off. Especially if the average is, you know, it's getting away from the average, there's going to be profit taking. Um, but this is all just reversion to the mean. We've got that same thing where we popped right up here, getting well ahead of this, you know, this sort of average. It's not really the moving average, but just your average buying. So it means that less and less people are going to be likely to be buying it so far away from your moving averages, so far extended, all that sort of thing. And that's where it's always useful to look back on the charts. But what we've seen here is just this. Sorry, look back on the weekly charts, not just you're looking at the daily. I mean, there might have been a prime set up here on a daily chart. You go, okay, we bought into it, then turn around and got whipped straight back out again, purely because longer term traders are looking at this zone up here. It's been a bit extended. You're looking at a weekly. I go, okay, maybe I bought some in here. I'm looking to buy more, but I don't want to buy it up here because my longer term view. It's looking great, but I don't want to buy it up here because it's too extended. I'll just wait for a bit of a correction low, and if they miss out, it doesn't matter. They've still got some exposure to it, but there's all different plan of attack, different ways to trade it, or different people trading it in different ways. So I'm always inclined to look back on the weekly first to get a bit of an idea. Okay, this one's going up, definitely. We're potentially coming to that point. We've come all the way back down again. We've lifted, but we're coming back to that point. So the market had another couple of down weeks. It's lifted. Probably last week was a good week, as from start to finish, opened and closed higher. As the week before was more of a rejection week. We're starting to find that okay, we might be coming to a point like this, where you get to that point of agreement, it comes in and then starts to lift. And then if we get involved on the daily chart, when we're starting to lift on the weekly, and both of them are working in our favour, and then you'd be looking at least to those tops at 175, potentially straight through that. Um, just go back to the daily. So the daily could be in that zone now. I wouldn't suggest it is right yet. I would love to see it break up through 125, only because that's confirmation that you're taking out a key level. It's had a good little pullback. Buyers are stepping in. They're not letting it get down again to that 90 cents mark, and they're starting to lift it. Longer term buyers, shorter term, who knows? But we're starting to get more confirmation, whereas this one, without that confirmation, it could just roll over and retest this low. It could do anything, and you'd rather be out watching it because you don't know how low it's going to go. You'd rather be out on the sidelines, let it do its thing, and prove to you that we're heading up. So that was another one. So there's a couple in there. I don't know if that's the one. Yeah, I've had this rubbish stock before. This is one I had. I cleaned myself out, got out of this one. It was looking good. I can't remember where I bought it now. I might have bought it somewhere it was looking right. It was more of a punt than anything else. I made some money on it previously, so I think it was in here. Did all right. Can't remember what it was. It might have been a move up here. Did all right. Took off. Got me some gains, and then it turned around and head south again. So this is another one. JRV is a bigger one, isn't it? Ahead of itself. It's spent a lot of time. A lot of these have spent a lot of time correcting, so it's worth either just keeping an eye on that second for some charts that are setting up, or having a bit of a laugh at analysts. Either way, it's fun to do. All right. So anything you want to look at, guys? Let's just take a look at the overall indexes. Chuck some stuff in the chat. What you want to take a look at? Just keep an eye on that's Linus. Just keep an eye on that one. Just going through some of these. All right, so the Dow. The S&P, good sort of rejection on that day, but that's potentially just rolling over a bit. But seeing that rejection, even if it does roll over, I'm more inclined to think by seeing that rather than seeing something. Let's just show you what I'm talking about. It's more supportive of our view that we're looking at the market. Yeah, okay, it's got a bit ahead of itself up here. Had a leg up there, leg up there. It got a bit ahead of itself. You can see here, again up here, it was a bit ahead of itself. You've had to correct, good little correction. Gone bang straight back up and up here. Got a bit of ahead of itself, but stretched up there. What I'm looking at is the fact that I don't mind that little rejection. The fact that it's opened, gone down, rejected the lows of the session, not the day, just the session, and finished back up, pretty much a break even on the S&P on Friday. I think it was down slightly, but that was quite good rejection of that move down. So obviously the news, Europe got smashed, I think, on the open. Well, they got smashed pretty much through their session. The US has obviously reacted to that, sold off, obviously, on when Trump's increased tariffs or new tariffs on China. That news has triggered that, but it's been brushed aside a bit. So that's not a bad sign. So what I'll be looking for on the S&P is something that was happened previously, as opposed to this. You can see that gap down in the session. The sessions were down from start to finish, and then you started getting obviously capitulating. The same here. That's all different price action to potentially what we're seeing here. This is more inclined to, well, I'm inclined to think it's going to be a bit like this. You might get a pullback, retest the highs, and then you get sort of controlled action before you start lifting again. But this sort of action here is different to something that's just gone up, come down, and it's gone boom to what we've seen previously, even back here before all this started working its way out. And you can see it just changes the dynamics. You can see the dynamics slowly changing. Even this move down, that initial move down was completely different to what happened recently back in May. So we might get more of that replication in May. It doesn't pull back that much. You might have to get a bit of a washout like we did on this candle. You can see that way, and then it pops straight back up again. And that started the new leg up. Whether we're going to get that, whether it corrects sideways rather than correcting down. So we'll keep an eye on that. That's the S&P. Don't mind that at all. I think it's still looking quite good. The Dow, you sort of got the Dow's looking a bit better. It's got rejection. The Dow the last couple of days as opposed to the S&P. I think the S&P was up when the Dow was down, say 40, 50 points on one session, which obviously your top 30 stocks got beaten around a bit. But that session doesn't look too bad. So it'll be interesting to see how it goes tonight. Whether it starts getting bought up or held. You see the pressure still down. The stochastics are showing selling pressure, but it's getting held up on the chart. Like the price is actually hovering around that 25,000 mark. So that'll be interesting to see. That's still, that's already corrected for a few days. And this rejection candle is not too bad. When we got it previously, you can see just here that rejected that session, had a couple of down sessions, but then it got bought up again. So it wasn't too long. It got rejected. Then the buyer stepping in the next session, maybe some selling the session after, and then you get a couple of sessions of some good buying. It starts pushing higher and dragging in more buying. The news is good. They're brushing aside tariff, trade war concerns. So we'll see how that plays out. So that's pretty much it. The FTSE, boom, big day. That's probably you'd expect a bit of a bounce because they reacted down a lot harder to say, especially on the FTSE by the looks of it, a lot harder than what the US finished. Yeah, all right. Any questions on those guys? The ASX is, good day on Friday, and that's actually starting to tick higher, so that's not too bad. Just keep an eye on that. Weekly's back up again, so it'll be interesting to see if a couple of good news. I would expect if we finish positive today, I would expect the US to actually be higher, have a bounce tonight, maybe up a few points tonight, but we'll see. Anything you want to take a look at, guys? We'll get into it. Rather than hearing me yabbering on, banks are bouncing. Yeah, what are they doing today? So a couple of good sessions on those. Let's just go to the weeklies. Nice. Ooh, so look at that. So that's CBA. That's that potential washout we're looking at. So if you get into the daily, I know some people might look to buy it there. Let's just draw this up. I just want to show exactly what I'm talking about. I'm sure we spoke about this before. So Commonwealth Bank, that's your weekly there. You've got that clear sort of 70 mark. It's not exactly, it's not hard and fast. Never look at support as a hard and fast, a figure. It's a zone. Always think of it as a zone, because you'll get selling into that zone. People might look for, if it breaks through, they might bounce up. So it's more of a zone. It's probably, to be accurate, probably somewhere around just above 70 to just below. So this on the weekly chart, so you've got that sort of zone through there. Weekly chart, it could easily just be starting to reject that now. We're in a weekly, aren't we? Yep. So it'll be interesting to see. You've got to go down to your daily just to see if this leg down, you can see there, if we're starting to, I wouldn't buy it just yet, if we're going to break, or whether, tomorrow we could start the next few days and just head south, take out these lows. Okay, it could easily happen. We don't know what's going to, never try to preempt and guess what's going to happen. Yeah, I just, Paul, I had you in mind when I did the trade on, was it TCL? I had you in mind. I thought that might make you happy. Yeah, I love the small caps, that are. Problem is the market on Friday, we didn't do that well on our portfolio because everyone was jumping into the big blue chips. So yeah, I'm still got it's what I'm looking at is mainly based around the weeklies on CBA, because if you look at it, it's going to be in everyone's portfolio, super funds, your major funds, all that sort of thing. So they'll be looking for an entry. Maybe they're going to buy it up off this 70 zone. Then maybe they'll let it wash out. Maybe they're going to start accumulating it from now. As a retailer, it's obviously smaller. You want more confirmation than that, just to buy it and join in the fray. You don't know if it's just bouncing on major buying, or if the volume's increased. Don't know if the volume's increased the last few days. With a volume increase, you'd expect it to be bigger players. Yeah, good volume on Friday, actually, than what we've had in the past. So yeah, you want that to be confirmation. Now, off the daily chart, so this is a leg down from the weekly. Is that right? From about 80, 83, 83 marks. That's the leg down that we're just looking at. Yep, from about here. I'll be looking for that anchor to break. Yeah, sorry about that, Paul. I'll just refer back to the start of the chat. The website, it's held in Singapore, the server, and where it's held it's like a hub. They hold a business sector or business place where they have a whole lot of different servers. The whole thing's gone down. So there's a whole lot of servers in Singapore that are on the blink at the moment. We're one of them. So yeah, bear in mind, mate. So I haven't done one alert today. So what I'd be looking at, or have on the cards, that's your leg down. So you're really trying to just break down the anchors, okay? So you just really move down, pop up. That's your anchor for this leg. Move down. So that's your recent anchor. So even these two legs up, it can be below that anchor. It's still short. Until that breaks that anchor, the trend has changed. But at the moment, the trend is still down. Then you see it start to take out. So that's your new anchor there. Then we've consolidated. We're bouncing around here, and then we take it out. I just suggest that's your new anchor too. And then we're trending down. So you've got this little minor level probably through, let's say it's not a major anchor. Your major anchor is more up at 74 of the daily trend. But if we start taking out this little move down itself is probably starting to change, especially if you start poking your head up through this sort of dropping resistance, so this falling resistance zone through 71, then I'd be suggesting it could be worth, that's what we're looking at, starting to look for an entry opportunity. And just minimize your risk, because then you'd expect to, okay, we're breaking that trend down. Then you've got that, coupling that with that weekly support around 70, that weekly support that's been a washout. So we might come down, we might just pop up on the dailies and then come back down and start falling back down, retest to 70 or retest down towards it. And then you've got a major higher low. And then that's going to be a lot stronger signal. But there's no reason why we can't make some profit on the upside. If there's an inside level, we can trade something like that with just a corrective action higher. And that might just be, corrective of this weekly leg down, this move down on the weekly charts, correct up a bit, and then it could build a major lower high, and it could take out 70 altogether. We don't want to try to guess that. So what you're trying to do is put together the probability of this support zone holding. Okay, is this going to play out as just a washout? If it's a washout, happy to take a bit of an entry. It's going to be very early. Looking at that weekly, you can see that's been quite a powerful move down. It's going to be very early, so I wouldn't be surprised if there's a bit of a bounce where you can make a few bucks, and then it comes back down to do a test to more of a major scale, and then you probably want to be out, and then you're looking for that more of a major high low, something like this potentially. If you can see that it's popped up, you could have made some. I'm guessing you could have made, if you look at the, yeah, was that the most recent leg down? No. Oh, we'd have to go back quite a bit, wouldn't we? Yeah, so you could have, on this move here, you've had the market's pressuring and it's holding it straight into this 70 zone. It's pressured, the most recent, pressured in here, broke that level and bounced straight back up. You built a lower high here. It's come straight back down, but in one session, it's broken through, couldn't quite get there, take out that low and then rejected. Then you've got a couple of days up. If you bought it just through that lower high, for example, that's an entry. That's a legitimate entry. You've got, it's paid off okay, and then you could have closed it somewhere around 82 potentially if it took out this most recent level. I'll make that a bit smaller. Explain what I'm talking about. So that's a legitimate daily entry, but in context to what's happening on the weekly. So the weekly still wasn't looking that great at that stage, but you could have had probably an entry through here. Probably for me, it would have been somewhere around here after we've held up at that 70 zone. That's proved that it's holding up. Rejection here. That's only, you know, that's pretty much a test of the bottom. It is technically a higher low, bit of a washout there, and then it's turned around and headed straight back up again. It's taken out the most recent lower high on the daily. So if you're a weekly trade longer term, this could just correct up, build a major lower high, and then boom, straight back down again, if that's what you're looking for. But instead, what we're really looking at is comparing it to what's happening now. We could have taken a daily trade off that major support zone there. Daily trade, we don't know where it's going to go to. We know exactly where our risks are. Okay, your first level, you can see where it touched up and it started banging around that resistance zone. It eventually broke through. If you did buy it on that break or any one of these breaks through here, you bought it that little pop up here, your risk would have been here. That one, that entry here, your risk would have been there. You still paid off all right. And then pretty much, depending on how you got out, I probably would have suggested somewhere around there, you could have got out of that. You still made a profit on that. Even if it's just a weekly, it's a weekly major lower high, then it's got pressured down again. I think it got pressured down again. Yeah, so that was that move up there. So it was pressured back down again. You've got to move all the way back down to 70. So there's no reason why that's a clear major support zone. You can't trade it from the daily, make a buck, and look for that still that weakness to come back in on the weekly chart because you got it's quite a two different trading. I guess what I'm trying to say here. Um, there's a lot of time between one candle on a weekly chart or the setup on a weekly, a major lower high in a weekly chart. It could take 6 weeks or so. So there's a lot of daily candles in that. What's that? 6 5s, 35 candles. So it's more than enough time to make a bit of a quick buck. I mean, it could be that this thing just has a major turnaround. This could be the major move, the start of a new move. So we're getting in nice and early. We know where our risk is going to be. And again, we're not basing off the weekly, we're basing off the weekly support. The weekly's far from being set up as a buying opportunity, for the way I look at it anyway. That would be more something, it's banged around there quite a bit. You've got lower highs, it's getting soaked up at there. That's more of a buying opportunity on a weekly than this, because you can see that's pressed down, popped up, lower high, pressed down, popped up, lower high, and this has had a good strong leg from pretty much 82 all the way down to 70, 67, 68, but it's still around that key support zone. So I'm looking at this, is this going to be a washout in the weekly? If so, we start getting the daily breaking up, I'd suggest buying, potentially through here. It could have a lot of work to do. I hope this is making sense, guys, if you know what I'm saying. You could trade that off the weekly. I'd rather it pop up, pull back, build a higher low, and then you could start to look for an entry after a higher low on the daily charts. That daily starts, the MA start coming together, even cross up, and the weekly could be crossed down. Obviously, you're getting the weekly staying down, the daily could be staying up. Just bear that in mind if you're going to buy it. There's nothing wrong with doing that because, especially with a bank, if with what's happened in the past, especially CBA is probably a prime example. They've got fined. A lot of what they've done wrong has probably been filtered through, and has been already factored into the market. If that's the case, I'd start to be looking this as a washout as opposed to anything else, as opposed to more weakness to come because of something we don't see, something from the sidelines coming in, some more news to trigger another sell-off and so on. I'd figure they've got a lot of their stuff. They just went, here you go. Here's everything you want to know. That's all our crappy news. It's all in one hit. Take it. The market's factored in. Boom, gone down. They've got their fine. Maybe from here now it's rebuilding for them. No more bad news to come out. They've done that. They've paid their dues. We might be starting to this market starting to factor this in if it's a big washout in the weekly. And if that's the case, and you're getting nicely on our daily, so be it. If you don't, if it starts popping up and shows a bit of weakness, just be prepared to get out, reassess it. God, long-winded there. I hope that makes sense. Yeah, could be. Could be, Paul, just reading your notes there. I read yours, Helen. They always reverse back into a rising in May. They do this. Talking about washouts, that's a prime. This would have been, if you're just trading it from the daily and not taking note at this point, um, washouts happen a lot on banks. Or more often, they happen a lot more on, say, currencies and futures. If you watch those markets more, you intraday trade those, they wash out all the time. Every second bloody level they wash out. Whereas the shares don't do it as often. You get some shares that barely do it at all. They come down, touch to the T or slightly higher, then start to go up again, or vice versa. They don't tend to wash out levels that much. They won't sucker in a few buys like we've done on CBA just through here. Well, that's the worst straight line I could do. Like they've done here, pop in, drag in a few buys, maybe have your stop there, straight back down to stop them out. That would have been me if I was going to trade it that way. You could have traded an inside. That was a prime example of trading an inside level to keep your risk even lower. You could have front run that. You see it a couple of days down, you might have taken it out at break even, who knows. But that's a good way to trade an inside level to reduce your risk on something that doesn't work out for you. But a lot of people would have bought this on that break through here, got suckered in, stops down here. They were looking okay just here, bounced up, stopped them out on these, with this bust through just in there. That was at the start of Feb, I think, wherever. So they tend to wash out a bit more. But if you take it in the context of what's if you drew that, that would have been a bit of a heads up for me. I like to do that as, yeah, there you go. That's a bit of a heads up. So that would have been, when it broke down here, you're looking at it going, oh, even if it bounced back up, you got back up. Bounce back out, you got back out on this candle the next couple of days, because there's good heads up that something's not right. When they start to break that, it should have been brought up here and continue its way up if it's strong. But that's why it's always important, I feel, to take note of what's happened on the weekly as well. On the weekly, at this stage, we were well overbought. Bit of a pullback, pop back up. We took out the highs. So on the weekly, we got pretty much divergence between this stochastics and these higher highs and lower highs on the stochastic. So that's classic divergence there. So it's always good just to take note of what's happening there. At that stage, you got this pop up here, you get divergence on the weekly. Well, is it really worth the entry to buy there? I'd be looking for a weekly zone potentially to be buying into. I think it's here. It started 2017. Am I completely off the mark here? Hang on a sec. That's that high we were just talking about, wasn't it? That's it. So that's the high. Forget what I said there. Absolute rubbish. This was the level. Still got divergence here. High there. High on price, but stochastics showing divergence. Boom, sell off there. So I'm just looking for a prime. Around here on the weekly would have been a prime buy. Or more of a prime buy. I like this. So looking at the week, you could have been assessing that going, okay, on the weekly we're off oversold. Is it worth a buy? Yeah, okay, could be worth a buy, easy, because you got oversold. You know that there's people short sellers in here. They're going to have to. These are sort of equal and opposite. This move down as opposed to that move down. So even if you get another lower high build, say here, you're expecting it to pop up and a lower high to build and that market to continue its way down to 70. You still got to trade in that because it's extended on the weekly, it's extended to the downside. You're looking for a buy, and if you drop down that on the daily, you get a prime little buy. Well, you're not taking much risk at all. So here was a prime entry, here's not. Is that making sense? Just the difference between the two. Here, even though it looks okay on the daily, you're getting a bit extended on the weekly chart, extended to the downside like we are down here. So they're two different trades. So that, to me, with the weekly on its way down, would not buy it in here from a daily chart. Here, I probably wouldn't have anyway, but it is it's a prime setup, and you've got the weekly potentially. The weekly story is in your favor as well. There could be a bounce on the weekly. We're not looking for a trending trade at all. We're looking for something that's more of a bounce trade that's bouncing from the weekly. So there's more emphasis behind that move up as opposed to buying something in here. I mean, you could have had a small profit if we go back down to, if you're looking at it as a buy, say in here, or maybe you bought it in here, you're knowing what's happening in the weekly. We might have been getting extended on this bounce move on the weekly. If it's a bounce, it could have kept going straight up. But you could have it in what's your biggest risk. You're not looking at what's your biggest gain scenario. They're the fact that it's not a bounce, it's just a straight up move on the weekly. But we're looking at this as potentially this is going to bounce. We're looking for it to come up. We're looking for it as a bounce because this whole price action is weak. It's not strong at all. So you're not going to be looking for this just the market to turn around. You know, you pretty much. I would suggest you're dreaming if you think this kind of price action is going to happen, bang, straight up, and you're trading it from the daily, expecting this to happen um, without some sort of correction. Does that make sense, guys? What I'm trying to say? The weekly was weak, so if you traded in here, you might have had small gains. You could have been looking to book something, but it was going to be a tough trade as opposed to something in here where you go, okay, if I do play out the way I think, we are looking just for a bounce. In the back of my head, I've got that bounce scenario. So by the time we got sort of up here, we started breaking down. I could bail at a profit, looking okay. Okay, I've taken the risk. I've taken the chance nice and early that this was going to keep going. It's not. It's looking weak. We're starting to find some pressure, especially in here. I'm bailing. I've booked my profit, and I'll reassess it. And as it worked out, it's been quite good. I hope that's making sense, just what I'm explaining there, guys. But got sidetracked big time. Anything you want to quickly look at? I've probably got more than enough time. I can keep chatting. I've got nothing else to do. I'll just, I'll have to send out a few alerts. You'll see a couple pop up in a minute. So that makes sense there, guys. Cool. So that's why I'm not too concerned. There's a lot of things, you've got to piece together the puzzle when you're putting together a trade. And it's not just looking at the daily like we just did on, oh, that's not the daily, that's the weekly, like we just did on this move. It's not just going, if you're at this stage here, start of 2000, end of December, Christmas, you go, I'll just buy it on a break up there and then I'll leave it. I forget, come back after the new year holiday and go, crap, what's happened? It's not looking too good. You've got to piece it together. So really up here, there's only one reason to buy it is purely off a daily trade, and you're risking. For me, that was probably too much risk. You'd find a better trade somewhere else. But piecing together this trade, looking at the last couple of days, okay, it's rejecting up here. It's quite strong. That's some good buying supported by some fairly decent volume. Maybe today we're going to get another good volume day as well. We're starting to pop up. There's potential we're going to break this downtrend. We're starting to change direction. We're just breaking this downtrend. Don't know where it's going to. The weekly is at a prime zone. I'll put that together as one of the pieces as well. That 70 zone, it could easily bounce up. We can get a nice healthy bounce and get up to 74, 75 before we start getting maybe something like this. Even if it is just this move. This move went from 70 up to, what was that high? 75. So a $5 bounce before we started heading back down to 70. We could get the same reaction, a $5 or $4 bounce up from here up to 74, 73. So off a daily, there's more than enough fat in that trade. If you're trading it, some setup like this where you can see it's bounced back, push back down, you got to pop up. We're expecting to get a lower high. It pulls back, sort of retests this zone and starts to come up again. So at this stage, it's a prime little entry. You've taken bugger all risk on that trade, looking for a bounce trade, off, based around the weekly charts. There's nothing to say it can't happen here. Anyway, getting sidetracked again, easy. Whereas going down to, there's nothing really on this weekly apart from the sheer fact that it's extended to the downside on NAB, ANZ. ANZ's probably a bit different. You can see potentially we're finding some support there. And look at this as well, actually. It's worth chatting about this one. late November. You talking on a daily chart there, Paul? Or I'll just go back and see that date. EMA late November 2016. Yeah, so it's that move that we were talking about, wasn't it? Last Thursday. Yeah, weekly, right. So that was pretty much that leg up we were talking about. Very green. Good. CBO Macquarie. What's Macquarie doing? I haven't looked at that for a while. MQG. God, that's a tough one, isn't it? A tough one because every other bank got hammered and this is looking beautiful. That's just a beautiful chart. Look at this. I like seeing that when you get this boom and then you get a setup lower. And the anchor, this is another reason why it's good to take note of this one, guys, on Macquarie. I know this is a long time ago, but just knowing where your longer term anchors are, your shorter term, you've got the markets popped up here, so you've got a little anchor off the weekly down. It's down here. Markets pulled back, had to correct a bit, sold back down, but the anchor on the weekly hadn't changed just yet. And what it's done is start to lift up here. So you've had some really decent opportunities. And if you break it down to the week or the daily, I think there's some decent opportunities in here. When you come in, you've fallen short of the anchor, then you're starting to get some high lows just above that anchor, which is a really strong sort of a technical sign. It's basically a sign that buyers are stepping in at high prices. They're happy to support high prices, and if you start getting a pop up, you still got that overflow. You people who have probably bought it into here. It's a good part of a year, 6 months at least. They bought it up here. They've ridden it down through here, and every pop they're starting to sell into because they're just they're sick and seeing this loss on their books. It's given them the irrits. They might be, and especially if you're losing, it's easy to be negative on the stock. Oh, it's going nowhere. I'm going to crack the SADs. Blah blah. It's really easy. So that's what's probably causing this selling. But then it started, a couple of high lows starting to build. You can see, and then that's changing. It's gone a bit further on. So this little pop met with some selling. Little pop just got through the most recent high. Not too much. Then a bit of a pullback. So this pop has got a bit further up, and then you got this boom rejection straight back down to this support zone. And then it just gradually kept on going up. Would have been a nice little entry somewhere in here. But that's a good little weekly correction, and then it's turned around. As soon as it's got that weekly correction, that's for me, that's an early entry for a new weekly move up. Thanks, treated them as buyers, yeah. I'll leave that to you, Helen. That's a good question. On the daily there's an entry in here on Macquarie just recently. That's a good little entry. I mean, you look at probably on the weekly, it was a tough one to take on the weekly because you are extended. There's no doubt about that. But on Macquarie on the daily, it'd be interesting to see whether we make this as a double top and we get a deeper correction and it's the start of a sort of a weekly correction, or whether it just continues on tomorrow, turn around and head straight up through 118 and on we go. But definitely a little setup here, especially on Friday's move. Friday moved up, trigger buy through that high at 114.62. You might have bought it at 65. Your risk is just only a few cents lower. Something like that. I think you're in there. We jump on there. We'll get Helen to chat about it. I'll leave that to you, Helen. Get your charts out. Get your pencils and your rulers out. Draw your charts. Anyway, what were we talking about? NAB. Oh, that's what I wanted to talk about. Let's take a quick look. That if you looked at this purely on the daily, that's looking pretty much rubbish. There's only one thing only. It's extended. But there's no reason to buy something when it's extended to the downside. I think that's wishful thinking. It's not. And if you trade like that on the downside, that you'll probably trade like that on the upside. When it's just got up, it's extended and you sell and it just keeps on going. There's going to be times when it's just going to keep going and left you on the sidelines. So on the downside, I don't think there's any reason why you should just buy because it's extended off a stochastic, if it's RSI, if it's moving average, anything. I don't think it's not moving averages, MACDs, any of those sort of oscillators where they go from overbought to oversold. There's no reason to buy something just because it's oversold or sell it because it's over. Sorry, buy because it's oversold and sell because it's overbought. I don't think there's any reason that you've got to look for a setup. You've got to be proven right. All right. So down here, the daily is still looking a bit rubbish. It is extended, but that's the only thing to me that's saying potentially we're going to buy on our hands. But if you go to the weekly, no, that's not that one, is it? The weekly is crap on that. But actually, I'll see an inside zone. Look at this inside zone on national. It was ANZ we were talking about. You get a sort of inside zone around 26, which could, as opposed to sort of a major 24 support zone. So we might find that that's starting to find some support in here, especially with the most recent few weeks of capitulation. We're oversold down here. So if we start to bounce, I'll be looking for a daily, get that big push down on the weekly, and then you get this little high or low on the weekly, drop down to your dailies for a potential entry. And again, that's the same as what we just did on the CBA. It could pop back up. You get a bit of a move up, and then start to roll over, and you got that weekly lower high. It could be somewhere, around 28 or so. So just be wary of that from the weekly charts. You don't want to be buying into something when you extend it up on the weekly chart and you're looking for a lower high. What was the ANZ? Just want to see what that's doing. You can see it's touched down on that 26. So it looks like a lot of them are finding a little zone of support. What's Westpac? Westpac's more, and look at that. If you're looking for technicals, traditional technicals, look at Westpac. Westpac, we've got a support zone through here. We've got a zone, don't forget. We've just washed it out. This is your key level really on your daily chart as well. I think that's a daily I've got weekly. Yeah, it's way up here, 30.25. But that's on your weekly. So I wouldn't be looking for that as a bounce play because you can easily fall short. You get a 50-cent gain. I don't think that's worth it. Percentage terms, it's not worth putting that much capital into it for a few cents out of a bank. I think there's other trades elsewhere. So your key level on this one, which is probably looking a bit nicer because it can break up through here, and like you get a lot of the times on the banks. So we popped up, we pulled back to that's the support zone we were just talking about. If we get this pushing up through, I'm guessing it'd be a bit more of a washout. Then look for that daily back and fill here, and then look for your high low or you trade the play out. Then you've got a high low on the weekly as well, if that's making sense. Yeah, so that's sorry, what I was going to say on this one, we've got a lower low here, only by a bit, and then we've got a high low in the stochastics, which is it's just starting to pop up now. So that's your traditional divergence. So there's probably going to be a few divergence plays trading it here. Decent, half decent volume, probably nothing special on Westpac on Friday, as opposed to CBA. So my probably pick would be as CBA at the moment. I'll be looking at, but again, it's all dependent on the weekly because there's a lot of work to do to get this trending back on the weekly where you're going to get the bigger runs, bigger moves. You could easily get a pop on the weekly and then it rolls over again. So whether that's worth putting some, worth the risk. If you're short term, fine, it'd be really good. There could be a bit of a play, and you got only because it's coming off a key major support zone. They all seem to be bouncing off some. Excuse me, Westpac's not. Well, it's probably a fairly good support zone too through 27.50 to 28. Good support zone. CBA 70, good support zone. NAB's sort of hovering in no man's land really. You got a minor. That's more of a minor support zone for me. It's just a level. It's not a support zone as such. It's just a level for the market to pull up short or to test. Not really a major level where people could be trading off it. And ANZ, again, you're probably ANZ. Let's take a look at the weekly on that. ANZ, you could be getting that divergence we just said. This level is probably the only real support zone where it could be, it's tested down there now, but until that weekly trend breaks, the trend is down. The trend continues to be down on the longer term charts on the weekly until this is broken. That's about 28, 25 on ANZ, but just seeing this doesn't mean anything for the weekly anyway. It just means it could be a little trade on the daily. So just dropping down to the daily and see if you can get a higher low, building here, and then go for it. But just always bear in mind that this could be another lower high build. So if it runs out of steam at 27.50, you'd probably be cutting that pretty quickly. And that's because of the weekly charts. All right, okay, I'll log into Discord. If you haven't got an account, Paul, I can send you a link. But I've got a feeling you're actually on there, aren't you? I'm pretty sure you did jump in, but we'll see. Guys might call it a day there. So we actually didn't get anything to look at. It was good chatting about the banks. I think there's still some good potential in there. I find them harder to trade. They don't trade as cleanly. They're a bit more whippy. But as long as you know that, you look back on what's happened in the past with regards to trade entries and setups that you get, they tend to, like this, it pops through the high, and when it's going to start running, it actually would have been nice. What was that? So there's an entry in here, a few little entries. But anyway, if you just start looking back on what they've done in the past and just taking that into account, because a lot of the time that sort of price action repeats itself. Anyway, we'll see how we go. All right, guys, thanks very much. I'm going to be sending out a few alerts now, so we'll finally get them up and running and shoot them out. Thanks for joining me. Sorry about all the issues, guys, for about the app and the website. It looks like it's up and running now, so ready to go. We'll be back in on Thursday, so I look forward to then. Paul, if you can't get onto Discord, just shoot me an email and we'll get you organised. I'm pretty sure you're on there, so it's just a matter of you just re-logging into that account.